Good morning, everyone. Thank you for joining us. My name is Veronica Segovia. I am the member coordinator for the San Diego County Lodging Association, which is honored to sponsor today's webinar. We are fortunate to have SDCLA's Executive Director, Fred Taco, as our host. We're here to learn about and discuss Transient Occupancy Taxes, or TOT. Specifically, we're focused on another fun word, audit, as in getting audited by the city on TOT. Given how hotel occupancy has fluctuated during the global pandemic, today's webinar is timely, which likely is an understatement. I do have a couple of housekeeping items to mention. If you have questions during today's webinar, please type them in the toolbox on the right side of your screen. We'll answer the questions at the end of the presentation. If we're unable to answer all the questions, we'll follow up by email afterward. We will be recording today's webinar for those that weren't available at this time and to view later. As a reminder, this webinar is for hotel and lodging personnel only. If you're not a representative from a San Diego hotel or hospitality field, please log off now. And a quick plug for our next event on November 10th, the 2023 Hotel Economic Forecast Lunch Meeting, which is graciously hosted by the Handerly Hotel in Mission Valley. You can register today at our website, lodgingsd.com. Thank you again for joining today's webinar. Let us begin, Fred.
Thank you very much, Veronica. Hello, everyone. My name is Fred Taco, and I am the Executive Director to the San Diego County Lodging Association. We are pleased to bring you today's webinar on a very important topic. Today, our featured speakers not only have the expertise to provide us a thorough background on the subject, but also bring with them years of experience in advising the hotel industry through a multitude of audits, not just in California, but nationwide. Before we begin, a couple additional items that I wanted to bring to your attention. On the right-hand side of the screen, you will find the toolbox. Along with the ability to submit questions, you will also find all of today's supporting documents in the handout section. Again, if you miss any part of this presentation, we will upload this presentation on the SDCLA website. Before I introduce the speakers, I wanted to display our first audience poll question of the day. To give our speakers context, the question is, have you been contacted by the city to be audited for your TOT? This is a simple yes or no question. So go ahead and present that one. Thank you, AJ. As the poll results come in, allow me to introduce our speakers. Our first is Mitch Bryk. Mitch is a certified public accountant with experience in multi-state taxation. His areas of focus include sales tax as well as occupancy tax. Mitch is a director at Grant McCarthy Group, a firm that specializes in hotel tax related transactions. Also joining us today is Lynn Moorfield. Lynn is president and CEO of the California Hotel and Lodging Association. Both are a wealth of information. Not only have they been tracking this issue, but have been actively shaping the relationship between hotels and the online travel agencies for over 20 years. With that, gentlemen, the floor is yours.
Thank you, Fred. Can you go back to the slide now? Okay, next slide, please.
There you go.
Excellent. There you go. Good morning, everyone. My name is Mitchell Bryk, and I'd like to thank everyone and thank Fred and Veronica for coordinating this webinar. Why don't we now turn off our cameras so that we'll enlarge the presentation. In this webinar, we want to provide a full overview, with time permitting, of the terminology, legislation, litigation, and current audit activity being conducted by the City of San Diego. Our goal here is to educate the hotels and taxpayers, protect the hotel industry from unnecessary tax burdens, and work with the City of San Diego to remedy this OTC tax issue. A small disclaimer, I need to warn you that this is a tax presentation, which to CPAs like me may seem riveting and entertaining. but I understand how important this is to the hotel industry in San Diego, and I'll do my best to keep it brief and to the point. Everyone may have a different level of understanding regarding how OTCs operate and how this issue has progressed in San Diego. I'll begin with some of the basics and then get into the meat of the issue. Let's go on to OTC terminology. Next slide. This is a brief summary of the terminology that is used in the industry for online travel companies. I'll briefly describe each item. Online travel companies have been called a lot of different names. They're referred to as OTAs, third-party intermediaries, or room remarketers, and they arrange for the transfer of occupancy of accommodations. Important items are the discounted rate. That's the rate that's offered to the OTC by the hotel operator. The posted rate, that's the room rate that's paid by the customer to the OTC. The facilitation fee, that's the profit margin and markup earned by the OTC. And it's the difference between the posted and the discounted rate. And then there's the service fee. It's a form of service charge set by the OTC website. And it's typically bundled with tax and shown as taxes and service fees. Next slide, please. Here we'll condense the ways of booking a hotel room into these three separate models. There's the traditional way of booking a hotel through the direct hotel booking. There's the former commissionable travel agent models like the American Express and so forth. What we're talking about here is the OTC booking merchant model. Let's move on. Next slide. This is an example of the direct hotel booking website, and I believe this is familiar to everyone. So what we'll use for these examples is a posted rate of $100, and for illustration purposes, we'll use the 10% as the tax rate. The customer reserves the room online, and they typically don't pay any money up front unless it's a prepaid transaction. So what they see is a $100 room rate plus taxes of $10. And at the time of checkout, they pay the hotel $110, $100 for the room rate and $10 in tax. Now we go to the next slide. The same here for 10% tax for illustration purposes. This is an example of a typical hotel booking via an online travel company website. The customer goes online to the online company website. They see a room at, again, $100 and taxes and fees of $10, and they pay $110 in advance. What happens here behind the scenes is that the hotel has made available to the OTC a room at a wholesale rate of $80. So what happens with the hotel is once the customer stays at the property, the hotel receives the $80 plus $8 of tax on that discounted rate. That's 10% tax rate times the $80, that's $8. But the OTC has collected, in this example, $110. So what they retain is a facilitation and service charge of $22. Tax remitted to the local jurisdiction, in this example, is $8. Now let's move on to the next slide. The takeaway from this is $10 in tax collected via the hotel website versus $8 in tax collected and remitted by the hotels via the OTC website. So in this example, we have a $2 shortfall in tax for San Diego. The consequence is less tax revenue received by the city, and that is the main issue in this example for online travel companies. I'll just pause for a minute and see if Lynn or Fred have anything to interject here.
Yeah, thank you, Mitch. And I just wanted to chime in. This is Lynn. So, I mean, the gray box on the bottom. So the hotels remit the tax on the full hotel share and a full hotel rate, and the OTCs remit on the discounted rate because that's what they bought the hotel room for. So this is really the entire crux of the city's kind of view here is hey, wait a minute, a website reservation comes in from two different websites. On one, I get a $10 tax in this example, and the other one, I get an $8 tax. That doesn't seem fair to me. So I've already deemed that, hey, the transient occupancy tax should be 10%. Again, in this example, of course, to make the math easy. But the jurisdiction only gets $8 of this. So this is really kind of the big issue. And I mean, this chart is actually kind of what the city and kind of the online travel companies have gone through in terms of, hey, do you owe tax, do you not owe tax? And so there's a lot of other issues going on here, but basically the city's trying to get their extra $2 there because they're like, hey, just because it came through a different way, every other way that $100 room gets booked at your hotel via the call center, a walk-in, a group rate, anything else, the city or the tax jurisdiction is getting $10 instead of $8. So you can see where the city is saying, hey, wait a minute, I should be getting a full $10. Thanks, Mitch.
And then if you, just to add on to that is, if you take that $2 by hotel room, by month, by year, and then by the years that it may be open under audit or statutorily for the city, this turns out most likely in the millions of dollars for the city of San Diego. I don't have any hard facts behind that. I just know that based on other some litigation in other cities, this is what's been contested, and it's been in the millions of dollars. So the city is definitely looking very hard at this. Next slide. So OTC booking issues. So what are the issues here? The old issues date back, 20 years. Is the facilitation fee and the service fee subject to state and local tax and occupancy tax? The online travel companies claim this is a retail transaction and with two components, the hotel room rental rate and the facilitation service fee. The OTCs argue that they are service providers merely facilitating the rental of a hotel room by a customer. So if the facilitation fee and service charge, whatever, is subject to tax, how should the tax be collected and remitted? There's two different ways, a dual remittance system or a single remittance system. Next slide. So what are the differences in the ways taxes might be remitted? A dual remittance, now this is how they currently do it in New York since 2012. And I happen to be a party to how the state came about that law, helping them understand this issue. The OTCs collect on the posted rate and remit on the discounted rate to the hotel. The hotel remits its portion of the tax. That would be the $8 that you saw in the example, and the OTCs remit to the state and local jurisdictions the difference between the posted rate and the discounted rate. That would be the $2. So then the state is made whole. They receive $10, $8 from the hotel and $2 from the OTC. Under single remittance, it can be either party. The hotels receive the whole amount from the OTCs, or the OTCs remit the full amount to the state and local jurisdictions. Probably the cleaner of the two are the last one. The OTCs remit the whole amount. The only problem being, if you look at this in some detail, it would make it a little more difficult on audit because the auditor goes to the hotel and wants the records for the OTCs, but the OTCs have the record. They go to the OTCs, but the OTCs don't have the hotel records. So the dual remittance system is cleaner when it comes to both parties collecting and remitting and on audit. Next slide.
Hey, Mitch, can I jump in there? Can you go back to that slide real quick, Fred? So on dual remittance and single remittance, maybe I'm jumping ahead here, but didn't the Supreme Court case that you're going to talk about and the appeal kind of box California properties into a single remittance on this? So i.e. the hotel is the operator, and so the city really doesn't have a business relationship with the OTC companies. Is that fair?
Yeah, that's in reading the court case, that's what you would take from that. That's correct, unless there's some negotiating on this issue. But then, of course, the OTCs would have to register with the city, and then they'd be required to file returns as the hotels do. So that's correct.
Thank you.
Lynn is always here to make me honest. So what can we deduct from this, from these issues? The summary being applicable taxes are already being collected by the OTCs. Hotels aren't aware of the actual selling price to the customer. Complete data resides with the OTCs, and the OTCs are able to collect on the entire payment and remit taxes. So next slide. Here we get into some of the arguments. How do tax jurisdictions view this? The jurisdictions historically, over the last 20 years, through litigation and legislation, they view the OTCs as hotel operators. They control occupancy or are resellers of hotel rooms. And they say that OTCs should pay the tax on the full amount paid by the consumer, not the lesser discounted rate that's received by the hotel. But as we'll see shortly, the California Supreme Court had some different ideas on this.
Yeah, so this is the crux of the city's issue here, and well, pretty much every city in the U.S. is kind of like, hey, why can't we get our full tax amount from it? And so the OTCs have essentially resisted paying the entire tax unless they go to a commissionable model, which I understand that a lot of people on this call do have commissionable models and not the merchant model on this. But they've resisted, and if you go backwards, like Mitch said, if you start multiplying this by San Diego, Miami, and San Francisco, and Chicago, and everywhere else, you're talking about a lot of money for the OTCs. So they're going to dig in here. It's not a matter of just paying the city for what they owe in San Diego. It's a matter of their entire business model kind of takes a hit, and they've already essentially collected this information, or sorry, this tax amount. So it's kind of like they have the money to do it. They've just kind of relabeled it the service and facilitation fee. So there's different ways of looking at that, but I think that's the way the city looks at it. Thanks.
Thanks, Len. Next slide. So now let's discuss how state and local jurisdictions have sought to remedy this issue via legislative maneuvers and litigation. They've sought legislation, they've litigated the issue, and they've sought to exercise different administrative provisions. Several jurisdictions are taking the steps legislatively to amend their statutes and ordinances, modernize the language, and clarify that the room rate is subject to tax. But in many jurisdictions, including San Diego, if they modernize the ordinance in a way that appears to be a new tax or an increase in tax, and correct me if I'm wrong on this, Lynn, it requires 67% voter approval.
You're correct. Two-thirds on any kind of tax increases in the state of California, no matter what it is.
Okay, next slide. So with regards to legislation for state statutes and local ordinances, what is the general terminology? And here I've listed a few of the pertinent ones. Of course, the one being, you see this in a lot of court cases and so forth. The operator, it's just a shortened version here, a person who is the proprietor of the hotel. Occupancy, many of the ordinances in California read the same way here. It's the use or possession or the right to the use or possession of any room or any portion thereof in a hotel. rent, laundry list of things, but it's the total consideration charged to a transient as shown on the guest receipt for the occupancy of the room. Now we get into the rate parity, which you'll see in the Supreme Court case when we discuss that. It's described in different ways. It's a legal agreement between a hotel and the OTC providing the same rates for the same room on all distribution channels. San Diego states that rate parity is an agreement where the operator sets the minimum amount that can be charged by the OTC for the operator's room. In general, it provides the same rates on all the OTC booking platforms as well as on the hotel-owned website. So if you go to, and I've done this many times in discussions with state and local jurisdictions, showing what's on the OTC websites and then going to the major chains such as Hyatt or Hilton or Marriott, finding the same room for the almost exactly the same price by a penny or so. So that's kind of the rate parity amount, the best available rate. And what we're discussing here are the TOT, which is the Transient Occupancy Taxes, and TMD, the Tourism Marketing District. Next slide. So here's some of the key definitions in the current San Diego Municipal Code for operator and rent. This will be important as we address the California Supreme Court decision a few slides from now. Mainly operator and rent. Operator, the person who is the proprietor of a hotel, and then recreational vehicle park and so forth. Rent is the total consideration charged to a transient as shown on the guest receipt. Next slide. So San Diego took advantage of the California Supreme Court decision and they updated their definition of rent via this regulation. Now, some of you on this call who have been audited may have seen this regulation. It was adopted April 1st of 2021. And so the purpose of the regulation, as they state, is this regulation clarifies the definition of rent that is charged to transients and subject to the city TOT. So the following changes were added in this regulation that were not identified in the original ordinance. But the most important one here you see at the top is the rate parity amounts, which I identified before. The others are cancellation fees and resort fees and the like, but the most important is rate parity amounts.
Yeah. Hey, just real quick on this. This is where Mitch and I go through, and I'm going to say argue, but probably negotiate is a more appropriate word, with various municipalities in California for what is a taxable charge. And so the way these audits go, City of San Diego takes their own and does these internally, but other municipalities use a third party. And so what they'll do is they'll say, oh, hey, what about XYZ charge to the guest? We think that's taxable to transient occupancy tax. And so all of a sudden they say, hey, everyone, this new fee that you're charging or some other fee that's related to the guest room and the occupancy. And so that's taxable and you owe us a bunch of tax on that. And so this is always, this chart right here is almost always a moving target with any city in California.
And to add on to that, Linda, there's certainly an argument for cancellation fees. I'm just thinking about this, that cancellation fees means that you've appropriately canceled the occupancy of the room. And it's not a no-show where you just didn't show up. You've canceled your right of occupancy, basically. So technically, I disagree with this. If you go to the ordinance of the right use or possession of a room, you no longer have the right of possession. So a cancellation fee, which could be the posted room rate, could be charged to you, but it shouldn't be taxable because you lost your right of possession. So there's an argument there. Next slide, please. So aside from legislation, many jurisdictions have sought clarification through litigation. However, litigation can go on for years and typically has not produced positive results for jurisdictions because, as you can read through this slide as well as state and local statutes and ordinances do not necessarily back up their argument, and many of the jurisdictions that have litigated this have also lost. They do it on a contingent fee basis, and it lasts years, and then they lose. Versus going in and actually changing their statute or ordinance.
Yeah, the litigation. Sorry, the litigation part is kind of a tough one. So I'm sorry for everyone. We went into tax terminology to litigation here. So riveting stuff. But if you look at San Diego's transient occupancy tax, its origins are back to 1964, when there weren't online travel companies. So, you know, the industry and the technology and the way the customer interacts with the hotel has completely changed since 1964. And the ordinances just aren't able to keep up, and San Diego is one of those that isn't able to keep up on this. And so the cities are kind of boxed in by their original ordinance and their municipal code on this. So unfortunate, but it just, you know, things change.
Thanks, Lynn. Next slide, please. So here's the elephant in the room. The key elements of this decision are as follows. I think it's important to read them. The legal action is whether the San Diego transient occupancy tax is payable on the amount retained by the OTCs above the amount remitted to the hotels as the agreed wholesale cost of the room rental. The court concluded under the San Diego ordinance in a merchant model transaction, the operator of a hotel is liable for tax on the wholesale cost plus any additional amount for room rental. The operator requires the OTC to charge the visitor under what has been termed rate parity provisions of hotel OTC contracts. But as San Diego has effectively conceded, OTCs are not operators within the meaning of this ordinance. Now, as I see it, there's really nothing positive about this decision for the hotels. The good news, if there is any, could have been that the court found that the tax is due above the wholesale rate. The bad news is pretty much everything else decided by the court. The court left the issue hanging in the breeze, and the hotels apparently responsible for tax remittance as operators. Lynn, anything to add here on this court case?
This is just a muddled court case. So, I mean, we're just kind of dealing with everyone. The city, the OTCs, the hotels, we're all dealing with this particular court case and trying to operate within this, but it's really muddled. And it kind of, that operator definition a couple slides back, that doesn't include an OTC. And so again, it's tough for the city to do this. The ordinance doesn't match with the litigation and with what they want to do, nor does that match how the consumer purchases the guest room. So we've got a whole host of issues here, but boy, I sure would like a do-over on the Supreme Court case.
Well, I think it's a fat chance of that happening. This court case, by the way, was decided in December of 2016. Let's go to the next slide. So this is a Court of Appeals decision 2 years later, with some commentary from the courts and the city of San Diego, which I felt important. And here's some takeaways from the appeals court. The most notable being the first and last points, where these are statements right from the decision. It says the city seeks to capitalize on the Supreme Court's comment that to the extent a hotel determines the OTC markup, such as by contractual rate parity provisions requiring the OTC to quote and charge the customer a rate not less than what the hotel is quoting on its own website, it effectively charges that amount. And the last being that thus it's the wholesale room rate plus the hotel determined markup exclusive of any discretionary markup set by the OTC that is charged by the operator and subject to tax. So basically it's tax on the wholesale rate plus the difference between the rate parity amount and the wholesale rate. Let's move to the next. Oh, by the way, I should point out that as you see on the upper right-hand corner, we have some of these as handouts that are available to you, along with the presentation itself. So what's the outcome of the California Supreme Court decisions? The arguments in litigation, as Lynn mentioned, have gone on for years prior to this decision. The city has basically repeated what the Supreme Court said. Here on this slide, it says OTCs handle all financial transactions related to the hotel and motel reservations, basically at the end, but OTCs do not themselves own, operate, or manage hotels. This issue of who's the operator has been litigated in many jurisdictions. As an example, back in 2009, I provided evidence via a sworn deposition to the city of San Antonio on behalf of itself and all other Texas municipalities. I was questioned for several hours, I believe it was close to 5 hours, on the issue of operation and control by the attorney representing the city and the attorneys representing all of the online travel companies that were present in that court case. So they really tried to drag me through the mud on that one. Next slide. The result of San Diego's position after the Supreme Court decision was a letter, which possibly all of you have received from the city treasurer's office to the hotels, and it was dated September 10th of 2018. This letter is important as the city refers to it on almost all of its audits. What they're saying is that the Supreme Court decision issued an opinion that may impact your hotel, payment of TOT and TMD. The opinion affects those hotels who sell rooms through OTCs under the merchant model. Any room sold through an OTC, your hotel must remit TOT and TMD assessment based on the minimum retail amount you require in an OTC to charge its customer, otherwise known as the rate parity amount. And then it also says before the opinion, hotels had only remitted occupancy tax to San Diego on the wholesale room rate, resulting in an underpayment. Now, let's move on to the next slide. So the letter continues, basically saying you have indemnification agreements, most likely with the OTCs. And the purpose of this letter is to ensure that you're complying with the opinion, and on an ongoing basis, the city has paid the full amount of tax that they are due on the rate parity amounts and not just the wholesale rate. And finally, to confirm your compliance with the opinion, please send all contracts and documents between your hotels and all OTCs with whom you have had agreements from the year 2000 to the present. And it makes some people kind of shake when they read that one because it's going back 22 years. So what is the statute of limitations? In California, it's generally 3 years as I understand it. However, no time limits in the case of non-filing of a return, which technically has not been filed by the OTCs. Taxpayer consents to extending the statute via a waiver, and that typically occurs under audit, or false or fraudulent return or underpayment of tax. So that's probably between the non-filing of a return and or underpayment of tax is kind of where they got you here. So, the question is, can the city really go back to the year 2000? Will they go back to the year 2000? Will they go back 3 years, 5 years? We really don't know. Lynn, I know you're just shaking there, just ready to add some commentary on this.
So this is really, in my opinion, I guess in our professional opinion, this is really the city trying to keep their options open to be able to go to the OTCs and collect whatever tax amounts they believe they're owed. And since they don't have a business relationship, particularly with the OTCs, we're the ones that get this letter and says, hey, we owe taxes from 2000 to the present. And so they're trying to keep their options open as much as possible. Personally, professionally, business-wise, anyone else, I highly doubt anyone on this call has records that are over 22 years old that they've kept. And so the city has also said that, hey, if you guys don't have records, that's okay, we'll estimate it, which is kind of jarring for auditors and a tax side to come in and say, oh yeah, we'll just estimate that. Usually not how it's done on the tax front here. So I think we have a little bit of gamesmanship going here, but for sure it's pretty scary to the hotels at this point. We do have our focus squarely on that year 2000 and trying to figure out how we mitigate that if that comes back to the hotels. Thank you.
Okay, let's move on to the next slide. So in addition, the city revised its occupancy tax return to include additional OTC rent. So if you look, I'm looking at the tax return right now, and you have it available to you as a handout number 4. If you haven't seen it, you know, the first line is the taxable assessable rent, which is basically on the wholesale rate. And then part 2 here, number 2 on the tax return, additional OTC rent. So they're asking for that. And as I understand it, a lot of hotels have, you know, left that blank. Maybe there are some situations where they know what the OTC charges because it's a commissionable model. But as always, it's a problem because you're signing a return under the penalty of perjury that it's accurate and correct and all that. So I know it makes everyone a little nervous, like, I don't have this amount, I don't know what it is. So what are you asking me here? So let's move on to the next slide. So now comes what we've all been waiting for, the dreaded hotel audit. Now this is something I've been doing for years, handling audits on federal, state, and local jurisdictions. So not only do you have to go through about your day-to-day business of running your hotel, now you have your neighborhood auditor pestering you to provide revenue from third party and contracts that you may have never seen. So this is the typical approach of what we've seen in San Diego. Just know that the auditors know what they're looking for. The city issues a letter with the audit period requesting documentation. The auditor may provide you guides on how to run the OTC reservation report and how to find guest payment. They've been through this many times. They know how to do it. They request a screenshot of the guest reservation information and payment summary for a sample period. They referred the taxpayer to the revised regulation, the definition of rent, and on, the rate parity agreement, and notifies the taxpayer that they will estimate underreported OTC rent using audit procedures if requested documentation is not provided. Next slide. So what should you do? What are your immediate actions? Our recommendations are to notify management of the tax audit, notify the online travel companies of the tax audit pursuant to any of your indemnification agreements with the OTCs, comply with audit requests in writing and on a timely basis. If OTC agreements are requested, notify the corporate legal department, and of course the online travel companies. Seek outside professional advice if necessary, and if assessment is received, this is very important, notify the OTCs and protect your appeal rights because it's only 14 days in this instance.
Yeah, if I can chime in here. So this is where Mitch and I and Fred come in for CHNLA and the San Diego County Lodging Association in terms of providing you, I guess, advice and guidance on what you should do. But that bottom number of 14 days, that's a really short window. And we've mentioned this to the city. They shouldn't be doing this in the middle of August. Not sure that's going to slow them down much. But that 14-day kind kind of timer or clock ticking on this, you've got a lot of stuff to do. So you've got to notify your OTC, you need to talk to your corporate people, you need to figure out what this is. So when you get one of these notifications of tax audit, you really need to jump on it. Give us a call. We can help you run through it and figure out what your best course of action is, or at least provide you guidance in terms of what we think you should do. We're not providing legal and or tax advice. We're just providing guidance, but this is super important. This is a super short fuse on the timing on this. So by the time the OTC gets back to you, by the time corporate gets back to you, 14 days doesn't seem too terribly long on this. So I just want to caution everyone on that. When you get one of these audits, definitely pay attention to this.
Yeah, and I think this is a perfect time to launch the second poll question on this section. Close to 60% of the audience members have already indicated that they are in the process of being audited with the city. Quick multiple choice question on here. If you are being audited by the city, what phase of the audit are you in? Go ahead and answer the questions now, and give it just a couple seconds and then we can proceed.
60%.
Go ahead, Mitch.
Pardon?
Yeah.
I said
60% of the audit. Yeah.
So as we're sitting here, I'll just kind of go on to the next slide because we're about 42 minutes into the presentation. We do want to leave time for some questions, but the next slide will show some best practices that I've employed during my 30 plus years of handling audits. One of them being is actually having an exit conference, which is really important. And an example of this may seem funny, but it wasn't at the time. I was handling an audit at a very large hotel in New York City. And so the hotel director of finance called me. They handle all the taxes. And so I said, so, gee, how did the audit go? And the director of finance said to me, and this is a true story, said, great. When the auditor left, he said everything looked fine. Subsequently, the hotel received an assessment close to $1 million. And I said, like, George, what happened? Well, the auditor said everything was fine, fine to him. But at the exit conference, there were so many things wrong with the assessment. If they had sat down with the auditor, they could explain things, like cancellation fees, for instance, like some of the revenues that they picked up. Now, in your audits with San Diego, it's kind of zeroed in on the OTC thing, but there are other things as well that they may look at it. So this is kind of a laundry list of things that I've provided in my training to the hotels over the years. Having a pre-audit meeting, sit down and discuss the operations and the audit process, and then all the things in between, and then of course an exit conference. The other really important thing is all requests in writing and all your answers and responses in writing so that you have something to go back on versus a verbal conversation. Okay, next slide. Now, what should you do if your OTC agreement has been requested? Some may say, well, I've never seen an agreement, and what the heck is a confidentiality clause? So if you a lot of hotels have never seen their agreements, and the confidentiality clause typically prevents either party, the hotel or OTC, from providing this to a third party without the permission of the other party. So both parties have to agree to allow this to be provided to an auditor. The only way that I've seen this actually done, unless the OTCs agree, is through a subpoena, as they did in San Francisco some years ago.
Next slide. Definitely on confidentiality clauses, pay attention to these. These are business contracts that you're entering into. Some of you are franchisees and maybe your brand or your hotel company has the master agreement and you don't have any idea what that agreement is. So this is an audit. Make sure that you pay attention to all the provisions of the contract, and confidentiality clause is right on there. So what we don't want to happen is a hotel says, oh yeah, hey city, here's my contract. And then we notify the OTC and they say, hey, that's not okay for you to give them the contract and we're not sure we want to indemnify you anymore. So we're not going to protect you on this because you broke the confidentiality clause, essentially breaking the contract. So definitely be careful on this. This could be a make or break who's responsible for the taxation on this. Maybe I overstated that, Mitch, but I think
that's very good advice.
Thank you.
Okay, next slide, please. Okay, so ditto here. Am I indemnified? The agreement may include a clause which indemnifies and defends your hotel. Lynn mentioned this. These indemnification clauses commonly include provisions requiring the other party to the agreement to be notified of an audit within a certain period of time. Sometimes it's 7 to 10 days. Okay, so the next slide, please. Okay, well, here's your answer. It's kind of like, hi, we're the OTCs and we're here to help. Yeah, they've agreed to indemnify you if you receive this addendum, which we have seen at a few hotels. I don't know how many have received this, but we know it's out there. So yes, we have agreed to indemnify you, but only if you sign below, and you really need to read these points because they're important. So one of the terms of this addendum may involve rate parity or best available rate amount. And the addendum may require that your hotel agree that the OTC can display room prices for bookings at your hotel that are lower than the relevant rate parity or best available rate. So basically this changes your agreement. So there's a few things here, and I was kind of getting into the legality of the issue, but if you don't have the agreement, you don't know what your agreement says, and you may be changing the terms if you're allowed to actually sign this. So there's a lot of ifs here. You know, whether you can actually sign this agreement, whether you should. Our advice is really to seek counsel here before signing anything.
This is I'll chime in here. This is a tough one for everyone because, you know, hey, they come and say, hey, we're going to offer you an indemnification if you give us this, this, and this. And I think that it behooves everyone on this call to look at their agreement or figure out if they're already indemnified before they have to sign this. So do you need to sign this for more protection, or are you just signing this for the same protection and giving away rate parity on this? This is where you're going to have to kind of look at legal counsel and the corporate side on it. And this gets really sticky here, but I think this is largely I guess I don't want to give legal advice here. I'm a little concerned about this, that you're going to have to sign something like this, and it's not necessary at this point. So I'll leave it at that and say seek legal counsel.
Yeah, let's move on to the next slide, which I believe might be the last one. So you can read through that as we're talking, but you may already have indemnification through the current legal agreement. This is just something else that they add. And what I've seen that happens is the OTCs, once you notify them of the audit or you receive an assessment and you've properly notified them, handled all the right clauses in your agreement of timing and so forth, they then assign this over to an attorney who's local to the San Diego area. Beyond that, for us, it kind of goes into the black hole because then we never see anything again. So I'm not quite sure what happens there. But you definitely want to be protected, so that that if you do receive an assessment, you follow the 14-day period and notify the OTCs. So what may happen after all these audits are done and the city builds their case and knows what the total amount of tax due that they believe is due by the OTCs, we're not certain yet. We can only kind of guess as to what they're going to do, and maybe, I don't know if there's any more discussion on that issue because it's all kind of guesses at this point. But this brings us to the end of our presentation, and I hope this has been informative. I'd like to thank everyone for attending. I'd like to turn this over to AJ now to see if there's any questions.
Great, thanks, Mitch. As we transition into the Q&A portion of the webinar, please remember that you can type your questions into the question section of the toolbar on the right-hand side of your screen, if you haven't already. Now, for our first question, I have been contacted by the auditor and was informed that in addition to the regular audit, they will now also do a TOT audit on the OTA tax revenue. The auditor is asking for contracts and reservation information. Isn't that privileged information, or do I really need to turn that over?
No, not necessarily. According to the, following the court case, they can ask for this information. There might be some proprietary information that are on the guest folios or the information that the hotel pulls from its records, whether it be credit card information or name and address of customers and so forth. You have to kind of look at that, but they are entitled to information that they're requesting. It's certainly up to you and engaging a professional, either a CPA, a tax person, or an attorney, to determine if they're going beyond what they should receive. So it's basically a typical audit. And when we get into contracts and things like that, we've already addressed that. That's subject to both parties, and whether it's in your interest to, you may seek permission from the OTCs to provide it, but maybe there's something in there you feel that you don't want anyone to see. I can't think of what that might be, but that could be a circumstance.
Yeah, the confidentiality, just to add on to that, the confidentiality clause works both ways. So the hotel has a confidentiality and the OTCs have confidentiality. So that's going to be up to the individual hotel. If there's a confidentiality clause in there and a hotel asks the OTC if they can give that to the city and they say yes, you still have the decision of whether you want to release that to the city at that point. So just know that goes two ways on that side.
Great.
Okay, next question.
Yeah, so the OTA, specifically Expedia, isn't too forthcoming and helpful when I contact them regarding the tax audit. I feel this is their responsibility since I have paid taxes on the amount that has been received by the hotel. Do I have any rights regarding this, or can I demand that Expedia assist me?
Yeah, that's a tough one. The Supreme Court case kind of left it in the hotel's lap, which is unfortunate. You want to make the best effort and certainly keep the auditor informed as to your obtaining of this information. Again, seek information in writing from the OTCs and their responses or non-responses so that you can provide it to the auditor. You can't make up the information. The problem is the city may. If they don't receive anything, it's our old saying in the accounting world is they'll go out into the parking lot and take numbers off the license plates. They have to get the information. They'll try to extrapolate it from some type of source if they don't get hard information. So you definitely want to work with the OTCs. They have been providing some information, but as I understand, it's the hotels tap into their system, but they can only go back so many years, a couple of years or whatever. So, but yeah, it's sometimes difficult.
Okay. For our next question, I manage a smaller private hotel. I don't have a legal department to assist me with this. Do you have any suggestions on what I should do or where I can turn for assistance?
Gosh, my email's right below there. I should just point to that, right? Yeah, I mean, if you don't have a legal department, when it's a legal related issue, you certainly want to get the advice of counsel, someone that understands contracts. You want to engage a person that understands the issue. If it's a hospitality related issue, online travel companies, or contracts. It depends what the issue is. But if you don't have the resources, you don't have a legal department, the expertise in dealing with audits, unfortunately, that's where you seek advice from a professional who handles that. We're assisting a lot of hotels, thanks to Lynn and the CHLA. We're helping out hotels to the best we can. So, but that's my advice: is definitely seek professional advice depending on what the issue is.
Yeah, start with us. So, I mean, we're your association. We work for you. And, Mitch is a great resource for everybody on this call and for the entire industry. So if you're a member of SDCLA, call Mitch, and he'll guide you through this process. We're not going to provide legal or specific tax advice, but we can get you started and get you on the right track here. So no need to go alone. We understand that you're trying to run a hotel and this isn't your day job. So we're trying to help you out here as much as possible and kind of keep all this bad stuff away from the hotel. So please reach out to us. This is what we do for you.
Perfect. For our next question, does the audit period pick up from the last audit, or are they inclined to audit previously audited periods?
I've seen both, where it's a new audit period, and I've also seen where, hey, I've gotten calls from hotels where, hey, Mitch, we have a new audit period, plus they're looking at the previous period that was audited, but they did not look at the OTC issue, and they're picking that up. So it can be both.
I think, Mitch, correct me if I'm wrong, but I'm going to say the trick or the technique utilized by cities and municipalities, San Diego included, is hey, this is our last audit period and we're not going back any further on these specific issues, but this other issue over here that we have, or this other fee that you collected, we didn't look at that in the last audit, and so we're going to go back further than that on that last audit. Is that fair? I mean, they're kind of cherry picking issues that they didn't include in the previous audit.
Yeah, I mean, unless it's out of statute for whatever reason, I mean, they can go back and pick up, other issues. And with the OTC issue, that's what they're doing here. So,
yeah.
For our next question, what if you have sold a hotel and you get a TOT audit, putting you in a position where you don't have access to all the requested documents?
I guess so you sold the hotel. I guess it depends what type of a sale it was. If the person that purchased the hotel also, bought all the past liabilities of the hotel, which would be a sale of corporation, a legal entity. But if that's the case, I've been party to this many times, where I have to go back to the property where it was sold, and it's a box under a leaky pipe somewhere. Yeah, you have to go back to where the records reside and get the information.
Great. Looks like we have a point of clarification here with regard to equipment rental and TOT and TMD. Are we speaking of equipment rentals necessary for a banquet event, such as audio, visual, dance floors, etc.?
I'm sorry, is this under the new regulation?
Good.
I think what AJ's or what the questioner is asking is hey, what type of equipment is contemplated on this? I'm going to say whatever's inside the room is generally my thing. So I'm thinking crib rental, something like that. Or
I'm sorry, I thought it was audio visual that was mentioned. Did I get that?
Equipment rental was the one that was.
necessary for a banquet event?
Oh, well, then that's all equipment rental, correct?
Okay. For next question, our property has completed the audit process and received an informal amount that is due. Don't have the formal invoice yet. We're working to go through the appeal process. What support do we have from the Lodging Association to work with San Diego City to support hotels through this? Do we know how many other hotels have received the invoice for the assessment?
Go ahead, Mitch.
No, you want to take this one then?
Yeah, we don't know exactly. So obviously we're not working with every hotel in the city of San Diego, nor is every hotel disclosing their audits to us. We know there's a bunch of them. I have only seen through working with Mitch, correct me if I'm wrong, one that the hotel has appealed. Otherwise, we haven't seen assessment come through yet. And in discussions with the city, they realize what the crux of the issue is here is that, hey, hotels did not collect the money. It's not something that we have and that we're holding back here. So they realize that. That said, they're still after that, that one slide where that $2 differential in that example, they're still after that differential and they need to get to that. So I haven't seen a lot of assessments that have come through for invoices. And Mitch, I don't know if you care to opine on that.
Yeah, I've seen some assessments. I've helped with some of the letters for appeal. But I haven't seen anything beyond requesting to the treasurer's office that I want to appeal this assessment. I haven't seen anything beyond that. My guess is that the city is, again, collecting all these assessments to see what the amount may be and extrapolate it to a certain period of time. And it's anyone's guess as to what they may do with it. It's hopeful that they don't go after the hotels for this.
The poll that we just conducted on this is unscientific, but in terms of the respondents that are currently in the process of being audited, it's almost broken down into evenly to a third, a third, a third. A third are currently in the initial phase of gathering information or are in the middle of their audit. Two-thirds though have concluded their audit and are either awaiting the results or have already received their invoice. So, more of a cautionary tale to the 40% that have not been audited yet. But it is significant, and there are enough folks within the community, within the industry, that are already experiencing this. So we don't necessarily have this exact information, but again, unscientifically, according to the folks on this call, it's a third of them have already received an invoice.
Great. Before I go into the next question, I will note we are over our allotted time. We'll roll through just a few more of these questions. And if you do have a question that does not get answered here today, please submit it in the question box before you check out, or contact Fred or Mitch or Lynn at the emails listed on this the current slide. We will get back to you as quickly as possible. That being said, we'll go into the next question here. If our OTC agreement is not with the property itself, but with the corporate brand or the management company that is based in another state, would this put us at a disadvantage in a San Diego audit of our property?
Based on my experience, you probably won't be entitled to see that agreement. That's just it. If it's I didn't see our agreements when I was at Starwood. I was there 17 years, and the only time they ever showed it to me was for two purposes. One, when the city of San Francisco subpoenaed the agreements, and we were required to show them, and I went through that to see if there, what was in there. And the other ones when they asked me to help on confidentiality and tax clauses and so forth to get my opinions on things. But otherwise, I never saw our agreements. And I know, a lot of the other brand hotels, my counterparts at those properties, they never see their agreements. And the owned of a major brand, the owned, managed, and franchised properties, they don't have access to those agreements. That resides with corporate legal. So they just typically don't provide those to the hotels.
Yeah, those are all closely held, corporate secrets. It's competitive, so nobody wants to show what they're doing, and that's a brand advantage that they want to negotiate the best thing that they possibly can. So I've never even remotely seen one of those, just that we have one, and that's all there is to it. So it's kind of completely opaque, and so from the city's perspective, they're never going to get a hold of a large hotel company's OTC agreement. It's not going to happen. They're going to subpoena it, and they're going to go through court. So that's going to be a big deal.
That's excellent.
Great. We've received a proposed assessment. Is it possible, or has anyone received one and not been invoiced?
Received a proposed assessment but haven't been invoiced. So you receive an assessment, and you have 14 days to appeal it. Otherwise, as I read it, it's due. So that kind of, as I see it, that is your invoice, unless I'm not understanding that correctly. Is that how you see it?
That's the information listed, yeah. So that may be an interpretive question. Okay, for our next question here, can I ask about airline crew tax exemption look-back period? The city tax auditor is using a 30-day look-back formula to disallow airline crew tax exemption 30 days from the lowest numbers of rooms. For example, if the lowest number of rooms for 45 days is 10 per night, then on day 46, the number drops to 5. The city is saying that 10 rooms are only exempt for 15 days and then drops to 5 rooms after that.
So I guess it depends on, I've had a lot of experience in this, and it depends on, the consecutive number of days that rooms are provided. At this point, I'm a little dry on that issue, and I need to, I could definitely help with that, but I'd need to look that up. It depends on the jurisdiction, if it is San Diego or whatever. But yeah, we've dealt with this issue quite a bit, but I need a little more factual information before providing advice on this.
Great. And then for a final question, have you seen this type of audit activity in other jurisdictions?
Oh yeah. Yeah. Not with a Supreme Court case, but yes. It's been in a lot of jurisdictions, and that was one of the things that I did when I was at Starwood, was basically defend the hotels. So when we would get a notice of something coming out, either through legislation or whatever before the audits actually began, or an audit, I would go out and personally meet with the auditor to make sure they had a complete understanding of this. So it has occurred around the country. Most taxes, hotel taxes, are occupancy taxes, and they're locally driven. There are exceptions, like with, I'll just pick on New York because it's both the state and the city of New York that have sales and occupancy taxes that apply to the hotel. There's also Massachusetts and others where they have kind of a dual type of tax system. Most of them, and the higher the rates, are locally driven, and those are the problematic ones. In my personal opinion, I view localities as probably some of the more difficult ones when it comes to audits. States are a little kinder. They have more laws, more rules, and auditors have a better understanding. It's just cities seem to take it more personal, that it's their money, and it was never yours in the first place. Federal government, that's when I worked on IRS audits a long time ago. It's just a lot different there too. So the severity of the audit and the amount of the audits for localities, it's difficult because, and in addition, in California localities employ outside auditors, and I swear they make up things sometimes, and you just wonder where they got it from. So that's my take on locality.
Yep. My short answer is we haven't seen other activity to the extent that we've seen the volume of activity in San Diego, but San Diego's committed to this, and we've seen other Southern California municipalities, and Mitch helps CH&LA on many other municipalities in terms of questions and what's going on. So it's almost a constant issue in the state of California. It's just that this one's kind of coming to a head in San Diego. Thank
We
you.
did have the one years ago, and I can't remember what year it was, in San Francisco, where San Francisco sent out a subpoena for all the contracts, and they audited not only the hotels but the online travel companies, and then they tried to I don't know where litigation went, but then they tried to change their ordinance, and it went to a vote, and they lost. The OTCs out in media, they basically said no new taxes, and they won on that soundbite. So that was, I don't remember when that was, Lynn, but it was early on when I started working with you. So it was a difficult time period.
San Francisco, just to close it out, San Francisco is definitely that particular issue and that particular time in San Francisco. I think it's safe to say that has been the most aggressive approach, and it got all the way down to litigation and a ballot measure as well. So San Francisco is probably about 10x of what this is right now in San Diego.
Okay.
Right. All right, well, thank you, everyone. I think this is a good place to wrap up the webinar. For viewers, if you have any additional questions, please reach out to us using the contact information on the current slide. If you submitted a question that we did not answer, we will follow up directly via email. Thank you to our attendees for joining us today, and thank you, Mitch, Lynn, Fred, and Veronica for presenting today. Again, for our attendees, this PowerPoint and recording will be available to SDCLA members on the SDCLA website. Thank you again for joining us, and this concludes today's presentation. Thank you.
Thanks, everyone.
Thank you.